Hello, and welcome to the fifth episode in our podcast series on private equity investment in the professional services sector. Over the past few episodes, we've explored strategic remuneration and governance and regulatory issues that affect professional services when they're considering private equity investment. Today, we're going to approach it from a slightly different angle, looking at the financial and operational realities of firms that are thinking of taking on external investment. And I'm joined here today by our brilliant guest speaker, Claire Watkins. Claire is a partner at Buzzacott LLP and heads their professional practices group. She works very closely with small and medium-sized firms in legal, architectural, property and consultancy sectors, and has deep expertise in areas like tax planning, structuring, and regulatory compliance. Claire brings a wealth of experience to this conversation, and I'm really pleased to have her join us. Claire, welcome, and thank you very much for agreeing to contribute to this discussion.
Thanks, Zulon. Thank you for that lovely introduction.
So Claire, let's start with the big picture that you're seeing at the moment. So in what sectors are you seeing the most interest from private equity investors?
Well, I suppose it's mostly in my own sector, in the accountancy sector. There are quite a number of accountancy practices that have gone down the private equity route or are talking about going down the private equity investment route. There's a statistic I saw fairly recently that said 75% of the top 50 accountancy firms have been approached by PE investors. I would say anecdotally that I reckon it's probably higher than that, and maybe some aren't saying that they've been approached. But the ICAW say that about 12% of their members have actually taken private equity investment already. And I suppose what drives it with the accountancy sector is our model, because we have a lot of recurring work and work that's driven by regulation, and that of course makes us attractive to private equity or any sort of investment like that. So I'm seeing it mostly with accountancy practices. They seem to be leading the charge on this, but increasingly with law firms as well. I just find that sometimes with the law firms, they're at an earlier stage, and sometimes the conversations are happening, but maybe they're not progressing as far as they would do in a year or two's time. That's sort of what I see. But I think there's lots of capacity for private equity investment in law firms, and whether it's helping single entity firms to scale up quickly or consolidating lots of practices with a sort of turbo boost of external investment. And I think particularly private investment is incredibly useful for things like, and I'm going to mention AI here, which is the hot topic at the moment, but for use in technology, we're working with a firm at the moment actually that has a lot of mass transactional sort of homogenous services, and PE investment will help them be able to scale up tech-wise and streamline processes and be more efficient. I also think it's incredibly useful for new markets. So again, another one of our firms, which is very much a boutique sector firm, incredibly successful in one particular sector. They want to diversify, but they want some sort of outside investment to help them really kick that along. So I think it's incredibly useful for that. And of course, it's also incredibly useful for founding partners who want to monetize their stake in the firm and potentially exit.
That's really interesting, especially what you say about the accountancy firms. Certainly that's been our experience, and it's been across the board with accountancy, I think, from the very largest firms outside the big four to very much kind of much smaller regional accountancy practices being swept up into kind of consolidators. We've seen some activity, especially in the small to medium-sized firms in the legal sector, I think, but far less in the kind of a larger law firm area.
I think that's where the statistics that I've seen, and the statistics do vary depending on what you look at, but I think that's where, if you get behind the statistics, you can see that, for example, the ICAEW saying that 12% of their member firms have taken PE investment. That sounds like quite a small percentage, but of course those accountancy practices tend to be bigger than law firms, because there are so many more law firms, so therefore there are so many of them that are smaller. So I think that's what drives the statistic, and it's very difficult to compare the accountancy sector to the legal sector and see, well, which one's taking more of this than the other.
Yeah, that's a very good point. So what do you think is holding back law firms at the moment? Is it because PE firms are not as interested in law firms compared to accountancy, or law firms are just behind the curve at the moment?
I think sometimes law firms are perhaps not as prepared when they get the knock on the door from a potential investor. I mean, it's financial management is absolutely key to it, and they've got to be able to demonstrate that the firm has capacity for growth and how they're going to use the external investment to scale up. And I think sometimes they're just not prepared for those sorts of questions early on. So at the most basic, an investor will look at really basic key metrics like turnover divided by the number of staff. And if that doesn't equate to a figure that they think is attractive, then they won't proceed any further. Or the ratio of fee earners to non-fee earners, or the level of third-party debt. So I think if law firms, some law firms that is, were to get themselves in a position where they can present a really good picture just with those sort of key metrics at the beginning, that would help them get further down the track. And it's also less about what's happened in the past, although it's always useful to have a decade's worth of consistent, stable growth. But it's more about being able to evidence the longevity and the pipeline of work and the pipeline of people and ideas. I think also there's the need to consider an exit strategy of the PE investor. I mean, that these things are not going to be there forever, and some investors come in with they know how long they want to be involved with before they sell on to another investor or do a trade sale or something like that. So yes, I think it's being prepared beforehand with the financial metrics, and also, and this is probably something that you can talk on more than I can, but being prepared for things like the cultural integration, because it does put performance pressures on people, and there's a sort of loss of autonomy in a practice that is typically a partnership where we all tend to have a fair level of autonomy, and you can get that loss of partnership feel, and I expect you see that with what you do.
Well, culture is definitely one of the big issues that are factoring into the minds of firms who are thinking about private equity investment, alongside things like remuneration and governance, which tend to be the kind of key issues. And culture in terms of moving from a very traditional model, which can sometimes mean things like consensus decision making around things, and not as much rigor applied to things like performance management of partners and KPIs and financial metrics, and moving to a model that is very much driven by those things and will form part of the demands that private equity will make on a law firm or other professional services firm when they're making that investment. That is quite a big cultural shift, and I think as part of being ready for external investment, alongside having your finances and everything in order, firms need to be prepared for that kind of cultural shift, I think. So let's say that a firm does go ahead and bring in private equity investment, Claire. What kind of other changes we've talked about some of the cultural changes, what kind of other changes do you typically see in how firms need to operate going forward?
Well, I think it's interesting when you talk to a business that has actually completed and has got private equity investment, because the conversations that I might have had with them before that are very different to the conversations I have with them since they've got the private equity investment. The main thing that I notice, but I suppose I would, being that I'm an accountant and that's what I tend to talk to them about, is that they want to talk much more about financial metrics. The firm wants to talk much more about financial metrics and achieving targets. And that's obviously a good thing, because that's what businesses need to be so aware of. But of course, the reason behind it is quite often that the investors expect results and the firm has to achieve them. And it's all part of going back to that autonomy that is somewhat taken away, and they are, they are duty bound to achieve the metrics that the investors want them to achieve. I think there are sometimes some integration challenges. So, I mean, we've talked a little bit about the cultural integration, but also operational processes can be quite different. I've got a couple of examples actually of a client of mine where, two clients, where one was required to submit budgets before any new piece of work can start. And I think we all do that to a certain extent, certainly we do in our sector, but it's not something that every law firm does, and it's not something that every law firm does with every single piece of work, but this is what the investors wanted them to do. So that became a bit of a cultural change and an operational process that they didn't have before. and they felt the pressure from it, I think. And the other is a firm that was required to evidence the value of all the fee earners attending networking and marketing events, which, as we know very well, is quite difficult to do, because you can go to lots and lots of marketing events and nothing might come of any of them for a while, but then 2 years down the track, somebody who you met will give you a ring and say, oh, do you remember we met at such and such a place? So it's quite difficult. I think maybe there's a feel from the private equity investors that you should be able to bring back a piece of work from every single networking or marketing event, but that's not really the way it works. So there's a little bit of pressure there, I think, that I find firms are talking about a bit more. And I think there were some very positive things that I see firms talking about that they perhaps weren't before. So another client of ours had a stream of income from what I would regard as sort of a fairly standard piece of work, repetitive piece of work, which the private equity investors looked at and said, well, you're undervaluing this. To the clients, this is worth much more than you're actually charging them. And so they put the prices up for it, and no clients, as far as we know, came back on that and said that they didn't want to use that law firm anymore. But it was a way for the private equity investors to say, hang on a minute, this is really valuable. You need to be thinking more about your pricing structure here. And that was a huge positive for the law firm. So I think there's a greater focus on performance management, people development, a lot more talk about technology and automating work and streamlining processes, which is a positive, I think, generally speaking, anyway.
Yeah, and I agree with that in that it's not just about bringing in a pot of money from private equity investment. There are lots of other positive changes that PE can bring with it in terms of kind of professionalizing management and governance. And even, you talked about, providing budgets to clients at the outset of a matter. That is actually regulatory requirements in some regulated sectors. And the fact that PE investors are pushing for that means, being managed in a much more compliant way from a regulatory perspective. So those are all very much positives. Alongside some of the downsides, of course. So if firm is approached by a PE house, what are the kind of things that law firm or an accountancy firm that you're advising, what should they be doing to prepare it kind of in terms of kind of being adequately equipped to engage with that PE house and negotiate effectively a good deal?
Well, I think the first thing is to do a bit of due diligence on the firm that is wanting to talk to you, because just because somebody's taken an interest doesn't mean that it's the right fit for your business. So I think doing a bit of due diligence, looking at the experience of the private equity firm or whoever the investor might be, looking at the cultural fit again. That is so important, because it's all very well matching numbers and having a deal that is written in a contract, but if the people don't get on with one another and can't work with one another once it's all done, it's going to fall apart. So I think looking at things like conflicts of interest with the PE investor as well, because they might be involved in other businesses that directly compete and you might not be comfortable with that. And then it's getting together the basics, the information, that some of which I talked about before, getting together the key metrics and recent management information that shows your organizational structure, your client base, your recurring work, if there is any, the practice areas, the growth areas, and putting together as best you can and taking your time over it, the financial forecasts that are going to be the most important thing for a private equity investor to see. So I think I've certainly been involved in a few conversations where there's felt like a bit of a rush, private equity investors taking an interest in this, they want to see this, that and the other, we've got to do it by next Friday. And I think no, you need to take your time over these things, and you may come to the conclusion that you need longer, and the private equity investor might not want to wait that long, but so be it. So I think those are the things that firms should initially look at when they're having initial discussions.
And I agree with that. And I would actually probably add to that, maybe even before somebody approaches you, that if you are seriously thinking about taking on an external investor, you should be getting your house in order way before actually anybody approaches you. And actually, maybe you should be shortlisting the types of private equity investors that you would like to be involved in your business. And obviously, doing the due diligence on the PE house themselves from the outset and having your own shortlist is probably a good idea. Same as you would do if you were going out to do a merger, for example.
Yes.
So that you're targeting the right investor and not waiting for other people to approach you that who may not be suitable. Just one final question to kind of wrap up our conversation, Claire. And are there kind of any red flags or risks that firms should be particularly mindful of when they're considering external investment, especially from the financial perspective?
Well, I don't know whether some of this is strictly financial, but it is what I see. But just being mindful of the potential loss of control, it goes back to the, losing autonomy. That is going to be a factor to a greater or lesser extent. So being aware of that at the outset is really important, I think, as is understanding the private equity investor who is talking to you. And do you think that their way of running a business aligns with how you want your business to be run? Because some are frankly more aggressive than others, and the fit might not be quite right. Too aggressive a strategy that doesn't sit comfortably means it's just not going to work. So you need to make sure that you're happy about that at the outset, I think. And I think, and it goes back to a point you've just made actually, which is that if you get all these things ready and you get yourself in a fit state such that a private equity investor is going to be interested in you, and you've got the evidence to prove that the business has longevity and growth, and you know what you're going to do with the money that the investor is going to invest, you may conclude that you're just not ready for it yet, and that you might want to put it on the back burner for a year or two. Now, that might mean that the private equity investor has gone away. You may have lost the chance, but your business will be in a better state overall. And when the next opportunity comes along, or as you say, if you go out and try and find the next opportunity, you'll be in a really good position to be able to drive a good agreement.
And I think from the private equity investors' point of view, the key things they're looking for are really, as you say, the upside in the longevity in the business, the potential for growth. So a really good business plan as to how that growth can be achieved over the typical life cycle of PE investment, which tends to be 3 to 5 years. And also a really strong management team that they would have confidence in, that they think would be able to deliver that business plan. So those are the things that they will have a laser focus on. And if you are preparing for any type of investment, those are the things that should be your own focus, I think.
Yes, I agree. And some degree of flexibility. They want to see that a firm is willing to change and embrace new technologies, new ways of doing things, and showing that flexibility is helpful.
Well, thank you, Claire, so much for joining us and sharing your insights. It's really clear that private equity investment can offer some real opportunities for professional firms, but only if they're kind of prepared and aligned and clear on what they're getting into in terms of kind of potential cultural changes, for example, that we discussed. So if you've enjoyed our conversation, you can catch up on our previous episodes on our website. We've explored previously issues around strategy, remuneration, governance and regulatory issues, and those are all available on our website. And thank you again for listening, and we hope that you will join us for the next episode, which should be out in the next few weeks. Thank you again.